You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the OptionsInsider.com and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionFit.com.
Welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the Options Insider Radio Network. Beaming into you today from the show, not from our usual locale, not from the Options Insider HQ, the Options Insider Studios there in sunny Chicago, but actually beaming in from a little bit farther south here, from warm and sunny Florida. I believe that's how the locals pronounce it, and we'll be doing so for the next few weeks. So we sound a little bit differently, or sound a little bit different here on the show. That's why. But we're still beaming in here, making sure you guys get all the fun content that you're used to hear from us on the old network. And of course, where can you find all of that quality options goodness? Well, the mothership, the flagship, theoptionsinsider.com. Click on the Insider Radio Network tab and you're off to the races. Of course, while you're there, don't just jump to the radio. We love to have you listen to the radio, of course, but of course, also read some of that great unusual activity alerts. If you like what we talk about in the odd block, you're going to love. We got a bunch of it up there on the website. Andrew works really hard on some of that stuff, so make sure you read it. Then, of course, the breaking news from the options market, a lot of educational material, a lot of analytical, what we're seeing going up in the marketplace today, a lot of great stuff that you can really lose yourself on the website. And then, of course, while you're doing that, of course, check out the radio as well. We don't have a preference. As long as you do it all, we don't care how you consume it. And of course, you can also find the radio. If that is indeed your heart's desire, you can find it iTunes, Stitcher, TuneIn, Aha Mobile, all that fun stuff. Or just grab our mobile app, available for iOS, Android, and indeed the Fire OS. All right, and joining me on the old program today, the usual cast of characters, starting off with the man beaming in from a place almost as sunny, almost as tropical as beautiful Florida here. Of course, St. Charles, Illinois. I'm referring to the one, the only Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the Option Block program, sir. I'm sure you're not too sad that you're not down here in sunny Florida, because you're in St. Charles and you can't be sad when you're in St. Charles.
It's not possible. It's against the law. It's like in Legoland. Everything is awesome.
That should be your new town slogan. I'm sure the Lego people are not litigious at all. They wouldn't pursue that.
No, not at all.
St. Charles, everything is awesome. I would actually go to a town that had that slogan. That just sounds fantastic. I would have to just support them for their audacity, if nothing else.
Stealing from the major players of business. That's a sure way to get to the top.
Exactly. It works. What was it? Was it Jobs, right? Said great artists steal, good artists create, great artists steal, something like that. So there you go. Great towns also steal great taglines from great movies. All right. And also joining us on the old Option Block program today, beaming in from the far hinterlands, the wilderness of Maine, where he is taking a break from hunting and fishing to feed his family, none other than the Rock Lobster himself, Mr. Andrew Giovinazzi, from myriad different destinations, including many here on the old network. Check out the Options Oddities program every day, noon Central, 1 p.m. Eastern. If you haven't done so already, you can heckle Andrew live on the program every day. I encourage you to take advantage of that. Mr. Rock Lobster, welcome back to the program, sir.
Thank you. It is good to be here, fresh from foraging for my family's meals.
Nuts and berries.
Yes, to all my ex trading pals that knew me back when I was a city boy, they would giggle at all this hunting and fishing.
Yes. They say, man, he's fallen on hard times, but not so. He just chooses to live the rough life. Survivor Man has nothing on him.
Oh, no, not at all. Actually, I was fishing yesterday. I got my first fish of the season.
Well, there you go. I was only half lying when I said that. All right. Listeners, with the team assembled, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, and welcome to the Trading Block. This is indeed the portion of the program where we break down what's moving, what's shaking, what's catching our eye in today's market activity, including whatever just fell off Andrew's desk over there. And it was, as we are recording this, of course, for all of you playing the home game, we are recording this Thursday, June 11th, and it was a bit of, shall we say, a quiet day on the street today. Most of the major indices closing unched or just slightly, just ever so slightly to the upside. The NASDAQ almost literally unched on the day. The S&P up about 0.1% since the Dow following suit. And as we move languidly towards the end of the week, the weekend perhaps approaching, a little bit of the air coming out of the volatility balloon. We're south of the 13 handle right now. Over there in VIX cash land, off about 1/3 of a point today, hovering at around 1292 right now as we are recording this. So not a lot going on, a little bit of vol being squeezed out of the marketplace. But aside from that, there are a few individual highlights that caught our attention during the day. Perhaps Uncle Mike will start with you. If you could break away from the lovely poolside weather that is life in St. Charles, what caught your eye in today's activity, sir?
Well, a couple things. It's not, like I said, I still don't have a very big position in it, but Apple did kind of catch my eye today. It did jump above the 130 mark early in the day, and then kind of went straight down from there. Just so if you're day trading Apple and you got short, maybe about a few minutes into the marketplace, or I should say probably about a half hour into the market open today, you're doing a whole lot of grinning right now on Apple. So it just, with that, the 130 mark seems like it's a tough mark for Apple to get through recently. And today just kind of shows me a little bit more evidence of that, and that it got through for a little bit, and then it just kind of went right back down. The other thing that caught my eye today was, and just trying to keep with my newfound love of the macroeconomic world, TLT, yesterday, we're recording this show on Thursday, June 11th. Yesterday on June 10th, and pretty much during the whole week, we've had some downward movement in the bond world. And then today, it looks like we had some good auction, I believe, and it looks like TLT is up again. So it's definitely been a volatile week in the bond world, and Apple just can't quite get through the 130 level.
Yeah, you're right. It was a bit, it was a quiet day overall in the broad market, but Apple perhaps belying that a little bit, hit just a tick above 130, actually got as high as 130.18 today, and then selling off pretty aggressively to the downside right after that. You're right. Hit about a low of about 128.5 right after that, hovering in the after hours right going into the close today, right around 128.70 or so. So, yeah, not a lot of love for that that theoretically, empirically, whatever you want to call it, level there, 130, the emotional, psychological level of 130, certainly perhaps scaring off a few people. Any thoughts about overriding aggressively on that strike with the remainder of your position, Uncle Mike, or are you pretty much just waiting and seeing at this point?
Be lying if I said I didn't sell a call or two. But,
do I know you or what? A few years after doing this show, I think I have you're down to a bit of a science, sir.
You could just trade the other side of all my trades, because you know what I'm going to do beforehand. I'd hate to try and trade against your market making skills, sir. But it's not a very large position.
You trade a little bit small size for me, sir. How am I going to buy my 10,000 lots off your 5 lots?
No, I thought. Well, when I say small, I was referring to like a 50,000.
Oh, okay, that's right. That's true. I know you're scaling things. You've done that reverse split on your trade, so you're doing some size now.
Yeah. So, but yeah, it's like I said. I think that the 130 level is kind of a tough level, and man, you are a street smart, wise pit trader. You.
All right. Love for me aside, which we could certainly do a whole show on that. I wouldn't be averse to it. But Mr. Rock Lobster, what caught your eye in today's activity, sir?
How about the all-time lows in the volatility products? UVXY, VXX, all notching in all-time lows. Also, XIV, which is the inverse volatility product, I believe, at an all-time high. So if you bought this product, how about this for return? If you bought the XIV in 2000, in what was it, October 2011, in the middle of the European Euro crisis, whatever, you could buy that product for $5. Today, that volatility product is trading $47.34. How's that for return on your money?
And is it, how many reverse splits are factored into that, or is that just straight appreciation?
The XIV doesn't reverse split because it goes the right. It makes money when it's
that's true. It doesn't need to reverse split because it's got contango on its side for a change.
Exactly. VXX is basically probably then was about 20,000 and now it's 18. So you do the reverse.
20,000.
I mean, literally it's like 1900 and it's now 18. That's not even an exaggeration. It's done a reverse split like 4 for 1. I think 4 or 5 times, 3 or 4 times since then. So it's one of those things. And can something go below zero? Well, sort of.
Yeah, VXX hovering right around 18 today. No, we were joking on recent shows, but it doesn't seem off about 2.5% today. It doesn't seem as much of a joke anymore that we were talking about people piling in to those long-term. I think we were talking about the Jan 2017 at the time, 10-handle and even 7-handle puts. They seemed a wee bit out of the money, but still not that bad of a play. They seem even better of a play today. Yeah, in fact, there are 50,000 of those Jan 2016 10-handle puts open right now on that strike. 325 more of those having gone up today, and the Jan 15 puts, 57,000. Maybe someone perhaps legging into a bit of a put spread there. But either way, yeah, there are a few sure things in the marketplace, and I wouldn't go so far as to say this is a sure thing because there doesn't really exist, but this is as close to one of those as you're going to get. VXX is going to erode. We know it. It's a fundamental weakness/strength, depending on how you look at it, of the product. So some long-term puts in a retirement account, some long-term position, may not be the worst thing. Would you concur, Mr. Rock Lobster?
No, actually, a greasy meatball that we know of is a sporadic put buyer in those long-term products when the ball gets a little poppy. So again, it's like anything, you have to understand how something trades, but pretty reliable overall.
140,000 of the Jan 20 puts. These are now in the money puts, so they didn't have to wait any time on those puts.
3 days.
Those seemed a little out of the money. Now they're deeply in the money, and there's still a year and a half or so left on them. So, yeah, there's people are always writing in, hey, what can I do in my IRA? What's a good longer-term options trade? I'm kind of tired of just writing calls. What else can I do? Here's something else you could do, listeners. Is play around in these long-term puts. Find a put or a strike or a spread that works for you, and just set it and forget it, as they used to say on the old Ronco sites or Ronco shows, because these things eventually it's going to come your way. You may need some time, or in the case of today, not much time at all, because this thing is selling off pretty heavily to pull from Larry David. Well, in addition to VXX, other movers were lighting it up today, including a name I know a lot of you folks out there in the listening audience like to play around with. This is Lululemon, of course, the makers infamously of those sheer yoga pants. They had earnings earlier this week. I believe it was on the 9th. Stock still rocking and rolling as a result of that. It was off about 1% or another 70 cents or so today, trading right around 66 even. A lot of that sell-off today coming on the heels of the news that the founder, Dennis Chip Wilson, love that nickname. Don't see many guys called Chip in the apparel business, but c'est la vie. Maybe he's in the wrong industry. Maybe that's why he's selling his stake. He wants to move to the right industry. He wants to go to the tech world. But yeah, he's selling his entire stake. He's had a bit of a tense relation with the company over the past year or so, and deciding just to part ways, dumping all of his stock. The market not really reacting as aversely to the founder departing as you might think. Stock doing a pretty decent volume. Options, of course, lighting it up as well today. About 12,000 contracts a day. It's averaging doing 18, nearly 19,000 today. Surprisingly, a lot more coming on the puts, on the calls on the puts. You might think news like this, stock trending somewhat downward, you might think a heavy air action on the puts. Not so much, mostly on the calls. 2-to-1 calls over puts out here in Lululemon, so perhaps people thinking this one is poised for a bit of a rebound. About 28% of those calls, 28% of the volume having been calls sold on the bid, and over a third, over 4,000 actually lifting offers on calls. So about 4,000 of those contracts today coming in, people lifting offers on calls. So perhaps thinking this is a wee bit overdone. Also about 5,500 of those puts coming in sold on the bid. So a lot of bullish sentiment out there. In fact, net deltas were long today on the day. You don't see that very often in a name that's selling off and has some demonstrably negative news. Mr. Rock Lobster, I know this is a pretty popular one with a lot of our listeners. You guys chat about Lululemon at all over there in the pitch chat today? Did that catch the eye of any of your mentees?
You know, I would love to say it did, but it doesn't really move very much anymore. That's the problem. So, you know, the guy selling his family's entire stake, parting ways and taking his money and going. I don't know. I think that's I wonder what the guy's going to do next. But that probably gets kind of a millstone off the company's neck, having that guy split. You know, go on about your business.
That's a very Maine analogy, a millstone. Some might say an albatross. You go for millstone. I like that. It shows you've been in the hinterlands for a while. Gotta get that millstone.
Millstones all over the place.
Is that a common thing? People wearing millstones around their neck up there in the hinterlands of Maine?
They actually use them for parking barricades and stuff because there's a lot of them around.
Well, there you go. A lot of love there for the millstones out there in Maine. Also a lot of love for this other name that was lighting it up today. You know, I have fond memories of this name, Andrew. I'm not sure if you were on the SIBO at this time, but when they IPO'd back in the boom 90s, when everyone was loving themselves some donuts, Krispy Kreme launched on the SIBO, and they were handing out donuts to everybody. So definitely one of our favorite IPOs we saw listed, or listings, I should say, of options down there on the exchange. Then, of course, everyone knows their history. They kind of took it on the chin during that whole Atkins craze when no one apparently wanted to touch a carb, and so Krispy Kreme really got slaughtered. Now turn around a little bit a few years later, donuts kind of trendy again. Seem like they're coming in as kind of the next wave of baked good trendy treat now that cupcakes are kind of on the ebb. Donuts seem to be picking up that slack, at least anecdotally in Chicago. I see a lot of trendy, high-end gourmet donut places opening up with all sorts of crazy flavors. So apparently the donut is back, and it's moving hard, moving hot to the upside, and the market responding today with Krispy Kreme. They're coming off the heels of their earnings, which were yesterday, and the stock's still rocking and rolling today, up about 14%, or about 2.5 handles or so, to about $19.81. So this is a name that's been averaging of late not even 500 contracts a day. So Krispy Kreme has been kind of limping along, and all of a sudden blasting out to, at least comparatively for them, a sizable 5,300 contracts today. So about 10x, and pretty much roughly evenly split, 1-to-1 roughly calls to puts. So that's not something you see very often when the stock is as one-sided as it was today. It was rally ho mode, and yet people still dumping calls and buying puts out there in Krispy Kreme as well. So a bit of an interesting one. No particular activity that was net caught our eye in terms of weird stuff. It was really more just the paper lighting it up en masse here today. All right, that's going to do it for the trading block on this episode. And now, without further ado, let's dive right on into the shadier, the more dubious side of the business. Yes, it's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and welcome to the Odd Block. This is indeed the portion of the program where we break down what's catching our eye from a, let's say, a little bit less reputable perspective than some of the other stuff we talk about on this show today. What are some of the weirdos, the perhaps insiders, the well-timed folks, or perhaps sometimes they're just downright idiots up to out there in the options market today? We're going to kick things off with a name we've revisited once or twice in 2015. Kind of been an interesting name, interesting section of the world. I know a lot of people are leaning toward very aggressively these days. Talking, of course, about the iShares China 25 ETF, ticker symbol FXI. This one closing today $48.69, up about a half a buck or so, nearly 1% on the day. This is the name that does decent volume, about 150,000 contracts a day. So compared to most of the names we talk about, this one is lighting it up. And we saw another day about that same amount of volume, about 155,000 contracts going up. So it wasn't the overall volume that caught our eye as much as some heavy activity on one strike in particular. In order to find it for you listeners, I got to scroll out here to the AUGs in particular. It was the AUG 50 calls lighting it up today, with paper blasting out a literal ton in this case, quite a few tons. 15,000 of the AUG 50 calls coming out, paper selling those in one mega block, marked buy right on as the day progressed, a total of just about 2x that, just a hair under 30,000 contracts having gone up on that strike for a variety of prices. These options hovered, I should say, right around 151, 156 most of the days, and most of the trades went up around that same $1.52 range or so. I should mention as well, these went up with some hefty stock attached, about 600,000 shares. So we got ourselves a delta neutraler here, Mr. Rock Lobster, not just overwriting on some stock, I should say he already has, but actually putting up the stock simultaneously. And in essence, they're kind of discounting the possibility of some pretty aggressive moves here in FXI for the next few months. I should mention about 60,000 contracts open on this strike. The AUG 50s is one of the hotter strikes going out here in August. So there is a possibility he could be unwinding half of his position and taking off the stock as well. That's certainly one to consider. Mr. Rock Lobster, as you were looking over this one today, where did you fall on this one? You think we have ourselves an opening delta neutraler to make up a term today? Or perhaps are we looking at more closing activity here in FXI?
Kind of like the term opening delta neutral.
Yeah, I think I'll coin that one for today's show.
I think it was opening because normally, if you're unwinding something, it generally isn't quite delta neutral unless you've done some adjusting. So I just think this particular trader thinks whatever the move is done in China, kind of a bold one. I think volatility is definitely higher, so I understand why they might be selling them. But it does kind of like a bold, sold. China's not going up anymore. And obviously the trade has some room for the FXI to go up in August. Basically, they're kind of trying to pick, the sort of the all-time highs in the FXI. So maybe they're just looking at it's not going to make that move again. So that's all I see with that. Just a way to sell the high and still try to maintain some long with the underlying underneath. It's still a pretty good sized trade.
Yeah, pretty sizable for this one. I'm always impressed when they can get these big blocks like that off in a name like that. It does decent volume, but about 10% facilitated in one trade, and then the rest going up after the fact for 2x. That's an impressive degree of facilitation. I think some of our other people we profiled on this show, some of their executions, they could probably call these brokers and get a little bit of advice, a little bit of sage advice on these guys. As we move on to our next name here on the old odd block, our next celebrated contestant, our next victim, whatever you want to call him here on the old odd block. I still haven't decided, Andrew, if it's a plus or a minus to be featured on this segment. Maybe a little bit of both. Often, I think it leans towards the latter. We do tend to mock these guys. All right, we're going to pick things up here. We're moving all over the world today. We started off in China, moving over here now to Germany, in particular the iShares MSCI Germany Index Fund ETF, ticker symbol EWG, pretty much almost literally unched on the day today. So not a heck going on from an underlying perspective today, but the options, that was a different story. This is the name that does about 6,000 contracts a day, doing 16,000 and change today. So pretty big day for EWG. And when you're looking at the culprit for that spike in volume, well, you don't have to look very far. It came on one very, very sizable for this name trade out here in some July puts in particular. It was the July 28 puts that went up. Paper buy-in, and they bought quite a few, 14,200. Again, a one blocker. So maybe the same firm executing and facilitating both of these trades. Either way, pretty impressive size for both of these. Being able to get 14,000 contracts off at a fairly decent price here in a name like this that only does about 5,000 a day or so. That's nothing to sneeze at. And the total, like I said, about 14,200. That's pretty much one block. That was all of it. On open interest of 19,000 and change. We should mention it went up under that price variation tag. Again, if you have questions, I know a lot of you do, but what those tags actually mean, we wrote it all up on the Options Insider. You can go search for it there, search for trade tags, or I think what do those trade tags mean is actually the name of the post, very literal. You can go find it, just search in Google for it. That'll, of course, take you there as well. We'll highlight price variation, all these other things we're talking about all the time here on this option block, in particular, the odd block segment. It is possible as well when you see this price variation that there probably could be a delta neutraler lurking out there, perhaps doing some size hidden out there somewhere at a different time or a different price. Again, open interest is pretty sizable, so it looks like perhaps our friend here could be closing, but no matter how you parse it, this is someone putting up a bunch of out of the money puts here. If they are indeed closing, then perhaps not a heck of a lot lurking for the future here from a downside perspective here in EWG. Mr. Rock Lobster, what you take here on our friend putting up some price variation out of the money puts in EWG?
Either they're closing and just because, the news apparently out of Europe has been Greece was making concessions yesterday, but of course, everybody left the table today in disgust. We cannot get anything done. And volatility still sold off. It did not affect the EWG very much. So maybe this was a put owner just saying, I am done. 9-9, no more. I can't handle it. And I'm dumping my puts and I'm taking my money and going home. I think that is certainly possible with this. So certainly could be that, or either we'll see with the open interest if it, if it jumps, as in, 28's the line in the sand for July, and they're looking at nothing but blue skies for the German equity market. So either way, the trade looks kind of bullish to me. Either they're closing out puts that they own because they're giving up, or they're opening a pretty massive position. So that's how I see that one. So
either way, pretty sizable stuff. I'm doing a lot of Larry David impersonations on the show today. Pretty sizable. As we move on to our final name here, our final victim here in the odd block. This is a bit of a funky one, hence why it's being featured on the old odd block. Our last stop on the odd block global tour doesn't come so much on a region as it is this global spanning technology known as Dish Network Corp. If you've been following the headlines of late, these guys have been flirting with a bit of perhaps a merger, acquisition deal, whatever you want to call it, with T-Mobile. The T-Mobile CEO getting a little bit of hot water for perhaps tweeting out some inappropriate tweets ahead of this deal. So both of these stocks have been moving a wee bit of late. In fact, Dish hitting a high of about 76.30 just about a week ago or so here, and has since kind of trailed off. 72.79 is where it closed today. So coming off those recent near-term highs, but still rocking and rolling, still very volatile. And what we saw today, it was a bit of a funky one. In particular, it looks like, I suppose you can call it a time strangle, if you will, or perhaps a time risk reversal, depending on how you want to parse it. Actually, looks like, I think they're both lifting offers. So it looks like it might indeed go up in the time strangle category. What we're talking about, listeners, was starting off in the June expiration cycle, in particular, the June 67 halves going up 3,000 times. We also saw the SEP 67 half calls going up 3,000 times. $5 on the Junes, 730 on the calls. They went up 2 blocks on the Amex, both marked as spread. They both went up on the offer again, so it's kind of odd. You're not usually seeing this kind of paper going up. Usually, if you're going to see these type of time-type spreads, usually there's a roll involved. Usually, perhaps someone closing out the short June, roll into SEP, or perhaps vice versa. Not really seeing that. Not perhaps seeing more of a time stupid, time strangle, whatever you want to call it. We also should mention some SEP puts also went up. In particular was the SEP 60 puts going up 2,400 times. So perhaps you can term this a SEP strangle. It would be actually a total of, on the day, 3,500 and change. So you could perhaps call it the SEP 67 half strangle, going up on a little bit of a call heavy ratio, about 4,500 on the calls, about 3,500 on the puts. And if that wasn't enough, a little bit of a June 67 half kicker to boot. So perhaps our friend out here specking, we should mention there is some open interest on the the SEP 60 puts, about 4,700 contracts open there. Nothing to speak of on the SEP 67 half calls. And the Junes are also some size there, about 12,500. So it is possible, perhaps, our friend is taking the Junes off, rolling them to SEP, and then deciding, hey, I'm not so sure on direction, or perhaps I want a little bit more vol, so I'm going to turn the SEP into a strangle instead of a straight-up call trade. Or perhaps we're going to see someone just deciding, probably more likely given the directions of both of these on the offer, that someone saying, yeah, there's a lot going on out here in Dishland. I expect some news to perhaps happen, but I'm not sure about the time frame when this deal is going to get done. So I'm going to put on some SEP upside. I'm going to give myself a little bit cheaper, nearer term upside as well with some June. In this case, very, 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 very near term. And also, in case I'm wrong on direction, or I just want to add some extra vol, also add in perhaps a downside put kicker here for the SEP side. Mr. Rock Lobster, a lot of different ways you could potentially parse this one. I'm curious, where do you fall on this kind of weird multi-leg offer lifting trade going up out here in Dish?
I have to say, to be honest, the only reason why I put this thing in is because I could not figure out what the heck was going on.
That's what the odd block is for. Figuring out what the hell is going on. You also saw about 2,000 of the June weekly 75 halves going up. Looks like those are pretty much closing. So yeah, a lot of call paper going up out here in Dish today.
Like everything printed on the offer. I can understand the June 67 calls might be a closing trade, but then they're printing, if they're rolling, how are they getting the SEP calls for the price they're getting those? And the puts kind of trade right in the middle. I have no clue what the heck was going on with this paper. So it's one thing I look tomorrow and see, is somebody really buying that strangle? I guess so. And they're closing out the 67 calls, and they got a really nice fill on those. The only thing I can think of that could be possible, they get a nice fill on closing the June 67 half calls. And in return for that nice fill, they have to pay up through the eyeballs for the SEP calls. That's the only thing I can think of.
Yeah, he was.
And they end up with kind of a strangle. Now they might, and again, wishy-washy, but all the pricing was looking like they actually paid a little for the SEP puts. So I could see if somebody's doing a risk reversal in that. But again, they got great prices for those puts. It's like, when do liquidity providers give a customer such great prices like this? So I'm just shaking my head. I'm shaking my head and going fishing. That's all I can do.
If there's one recurring theme today in the odd block, it's great execution, great facilitation by whoever is putting these blocks up, because they're getting some great prices. You're right. It makes intuitive sense for someone to want to perhaps extend their long upside out to SEP and then finance it with some puts. So you leg into a bullish risk reversal. No brainer. We see that all the time. the weird thing with the June having so much open interest, where they short those calls and now they're flipping to a long, and then the open interest on the puts. You're right. There's a lot of weird stuff lurking, as well as some of the other weekly calls I mentioned. A lot of weird stuff to parse here. Listeners, this is where you guys can come in as well. We'd love to hear what your thoughts are on these trades or any other perhaps unusual activity you guys are seeing. And you say, hey, I'd love to have those guys on the Option Block program parse this for me a little bit, because there's some weird stuff afoot out here. The weirder, the better. Send it in. Chances are we probably already talked about it on the show, or we have it on the website. But once in a while, if you guys find some nuggets that we haven't found, and quite frankly, there's a lot going up any given day. We don't have time to talk about everything, obviously. So perhaps you're going to find something interesting, worthy of note. You have an idea? Send it in, even if it's a week or so old. Doesn't matter to us. It doesn't have to be exactly timely. It's more the analysis that can come from it that is of value to us, and indeed to you guys as well. And this one's certainly a lot to analyze, Mr. Rock Lobster. Weird stuff afoot out here in Dish. But that's why we love it. That's why we call this segment the Odd Block. And now, because it's Thursday, it's time for you guys to take the reins. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, and welcome to the Mail Block. Every Thursday, we extend the reins to you guys, the listeners, to send in your questions, your comments, your feedback, your random insults for Uncle Mike or the Rock Lobster. Go ahead, send them in. They can take it. And a lot of no shortage of ways for you guys to do just that, including, of course, leave us a comment, a question on the website. A lot of you guys like to do that. Use the feedback form on the website. Also a popular choice for you guys. Of course, you can find us via email, questions@theoptionsinsider.com, or via social media, twitter.com/options, facebook.com/optionsinsider, and stock twits. We are also Options Insider out there. Actually, I'm sorry, we're the Options Insider on Facebook. So no shortage of ways for you guys to make your questions, your comments known. Starting off with, we got one from the very, very intuitive handle of RJR357. He or she writes, Mr. This one might be actually for you, Andrew. I'm not sure exactly what he's writing about. He says, for the Mark Longo shows, which is a lot of them, are the option boot camps worth it? There are a couple of different ways you could view this question. If he is indeed writing in regarding our Options Bootcamp radio program, then I could wholeheartedly say it is indeed worth it, because we charge $0 for that. So if you want some education, that show's been running for quite a while. It's one of our more popular programs, even though we don't do it as frequently anymore. We're still in the process of finding a good educational partner to come back on board a program like that. So we do it about once a month or so. We were doing it twice a month, but it still ranks very highly in iTunes. A very popular program. We, of course, record that with our friend Dan, who also hosts our Options News Rundown program every day here on the network, a well-known options author himself. So there's some great education in there, and it's all completely free. So from a worth perspective, it certainly is worth it. And whether it's worth your time is a question you have to ask yourself. And I have to think it probably is that as well. We have well over probably 100 some odd hours of options education on that feed. If you haven't checked it out, listeners, or if you like the strategy block we do here on this program, then surf on over to the Options Bootcamp show. You can find it, of course, on our website, or just search for Options Bootcamp in iTunes or Stitcher or TuneIn or wherever you get your shows, and you'll be off to the races with some great and entirely free education. Now, if he's talking about the paid side of the educational space, Mr. Rock Lobster, well, then I think you're better equipped to explain the value proposition of your boot camps than I am, sir. So please explain to Mr. or Mrs. RJR357 exactly why your boot camps may be worth it.
The simple thing is, our boot camps teach you how to understand how options work. So for the clients, actually, we have a boot camp running right now. They're learning things to even save them on commissions that'll pay for the boot camp. Basically, we're the cost of what? $1 2 times. So the boot camps are relatively inexpensive for all the learning you're going to get. And almost all our clients said our boot camps have saved them money or made them money just by making them pick smarter trades to do what they want to do. So that's what we do. There's a value to education. I'm sure Mr. Tusaw would agree. If you're an uneducated client, you go to Mike and he'll take care of you. But if you want to educate yourself, you can come to us.
Uncle Mike, since we're talking boot camps, do you have any webinars and or events that are called boot camp that A, you copied from my title, and B, you think are worthwhile for our listeners?
Yeah, I try to swear at my clients as often as possible and make it really like a boot camp and call them fat, out of shape, or whatever. That's how we do it now. But now to add to what Andrew's saying, it's kind of one of those things to where when I first started trading options, I know I've told my story on the show before, there was really that many years ago, there was a cab driver out there that was doing a lot with options education, and that was pretty much it. But in this day and age, if you have something like the option pit, to where you can actually become educated from guys who actually traded on the floor and know what they're doing, I think that's a tremendous value. And almost every time that I hear Andrew or Mark talk about one of their boot camps or whatever it is that they have, there's always a value in it. Like Andrew just said a second ago, the camp can pay for itself just by, and even if you get 1% of what the camp actually gives you or what the class actually gives you, you get your money back on it. So that's really what I like about what Andrew and Mark are doing. And so I think it's a very worthwhile thing.
A pleasure to hear your voice again on the program, Uncle Mike. And since we haven't had a chance to hear it for a little bit, we've been odd blocking and everything else, I'll give you pride of place on this next question, a very open-ended one from a listener who goes by the handle Mr. Fed. So you can take it however, in whatever direction you want to go with it, Uncle Mike. He says, can you explain how to use gamma around earnings? A very frequent topic of discussion here on this program. I know you have a few use cases you tend to favor, so why don't you maybe illuminate those here for our listener, Mr. Fed?
Okay, if you're trading around earnings, well, it starts by getting on your knees and praying, I think. But no, in terms of trading earnings, it's something that I tend to shy away from. The way with which I'll trade earnings is to try to protect underlying positions around earnings. I know I've a couple years ago when I was really very heavily into Apple, I know I had a lot of stories of exactly how I would hedge it going into earnings. Ultimately, in terms of how you use gamma during earnings, gamma is the change of delta. So in other words, gamma is something to where, let's say that you are buying an at-the-money option. You have a 50 delta option, let's say, and let's say you're just buying an at-the-money call going into earnings, and you believe that that stock is going to go way up real quick. And what the benefit of gamma can be in that 50 delta option that you're buying is that if that long call goes in the money, it becomes a 60 delta call and a 70 and an 80. And by gosh, if it's going your way, if you don't think that's excitement, then I sure don't know what is. But with that, in terms of using it around earnings, the tricky part is that at the money call that you're buying will then lose on the vega side, meaning that volatility will oftentimes come out of it if you hold it through earnings. So I think it's kind of a tangled web with which to weave when trying to trade gamma around earnings. Now, the other way with which to use it is that, let's say that you, and once again, I'm giving an oversimplified example here. Let's say you sold a put going into earnings because you had the same bullish sentiment. Well, if the market goes higher, then with that, volatility comes out of the put that you sold, and you have delta working in your favor, and it's just the ultimate win-win feel-good story of the year with your trade. Now, how that will work against you is if the market will go down, not only will you have delta working against you, but also because the market's coming down, then maybe there was some type of a surprise in the earnings announcement, and that creates more fear, meaning volatility is then going against you as well. So those are the ways with which it can be used for and against you going into earnings. Now, the other way with which you can use gamma around earnings is, let's say that you believe that the stock's going to rally going into earnings. Well, if that's the case, it does rally, then you can buy an at-the-money call option and then get out of it before the earnings announcement, before volatility comes out. So there's a variety of ways with which to use it. What I think is most important when trading earnings is, I think if you are going to trade earnings, I think you need to pick a side, either be bullish or be bearish, and go along those lines. I think it's very difficult to profit trying to be neutral going into earnings. So with that, I will toss it to the Rock Lobster.
It's hard to follow up that one. Oh my gosh. The only thing I would say about gamma in earnings is the tricky part would be volatility is pretty high, which tends to dampen gamma down prior to earnings, and then they squish all the volatility out after earnings. So you have to, anything you set up that has gamma component long or short, you have to transition the position to kind of the high vol environment to low vol environment to actually see what you're going to get, because what you might have on the Monday prior to earnings is not what you're going to have on the Tuesday after earnings. And I could probably do a whole boot camp on volatility collapse through earnings and all the different positions you can put on. Probably a little longer than we would have for the show. But the idea is ultimately you want to understand what the position is going to look like after the cycle. So, I mean, as far as trading gamma, 90% of it's the volatility crush. And if the market, and if the market maker at the money straddle is going to be accurate. So one thing we've seen this year is we've seen a lot of runaway trades where you think your gamma exposure is really low because the volatility is really high. And what happens is you get a huge move, they collapse the volatility, and all of a sudden you have options that are exposed, let's say if you're short them, to gamma that you never had at the old price, or let's say the price on the close prior to the announcement. So the position you end up with is drastically different from the position you started with. And that could cause people all kinds of fits. Or you create a position, it's kind of what we do at Option Pit, when we have earnings that look interesting, that you're more banking on the collapse in earnings and the stock moving kind of in some sort of zone where you have some gamma that will take over. Usually we try to pair a long gamma position with some short gamma that's sort of out of the money. And if the pricing looks interesting, you're trying to make your long gamma run to your short gamma, essentially. It's hard to set those up because the market kind of knows that trick too, and they try to price that efficiently. But that's how I think about gamma around earnings. And prior to that, the only thing I would say is what you might have is sort of what we'll call free gamma, closer to the cycle, depending on the stock, because the decay gets arrested or slows down prior to earnings, mostly because the at-the-money straddle kind of gets fixed in time as you approach the earnings date. So you have a chance to buy gamma, and you don't have the huge theta that's associated with it. Again, the problem with that is most stocks are kind of stuck prior to earnings. They don't really move too much. So unless you have, a fantastic opportunity, it's a play that, we use every once in a while. There are some stocks that lend themselves well to it. But again, those are two other examples I can think of just understanding how gamma is going to work through the entire cycle through the entire earnings cycle, like I said.
Well, switching gears here from the Uber general to the Uber specific now, the other side of the coin. We got time for one more. This comes from Roger L. He writes, were the calls sold or bought for Tyco? There are about 14,000 calls that are expiring in July as well. I'm not sure if it was a buy or sell as well. This came in as a comment on our site from an article that I was just researching and looking over while we were talking about gamma and earnings. And the title is the very, very straightforward, very, very specific: call sellers jump into Tyco. So looking at the activity that we were profiling, this one up, listeners, a few weeks ago, the one he's referring to, May 21st. You can find it on the optionsinsider.com if you want to check it out for yourself. And we were profiling essentially what looks like a bunch, 20,000 to be precise, of the June 41 calls going up, paper selling for 82 cents, went up in one block on the Philly. And we outlined how it essentially was a huge call seller. So I'm not quite certain where the confusion is. Maybe you're seeing something I'm missing here, Mr. Rock Lobster. What do you have to say for our friend here, Mr. Roger L?
I think those calls are on their way to go into the dustbin too. I don't know what he's missing. it looked like just, the stock made a move, and it was probably a call, somebody who owns a lot of stock and just smacked it. So I wish I could add some color to that besides that, but right now they look like they were exactly right on 100% because the stock has done nothing since then.
I can add a little bit of color to that, in that 5,000 of them did go up today. These are the June 41 calls going up yet again today. And Andrew is right; they have eroded quite nicely since that trade went up. They're trading for about a quarter or so right now. It's like 2,300 of them went up on an intermarket sweep for 26 cents. The market was 25 at 32, so it looks like paper was selling there another 300 or so. So perhaps someone coming in to finish the job they started a few weeks ago, Mr. Rock Lobster, and trying to squeeze out the last bit of juice, the last bit of decay there on that strike. Yeah, another 500, 600, 800 or so, nearly 1,000 going up for 27 to 28 cents, a little bit closer to mid-market on those, but still looks like they're mostly lean and sell. So perhaps our friend doing more, or perhaps someone else coming after the fact, Mr. Rock Lobster, and saying, you know what, that first trade wasn't bad. I missed the first kind where he got essentially double the amount of, actually a lot more than that, 82 cents, but still wanting to squeeze out the last quarter. I'm guessing if you're like me, Mr. Rock Lobster, you're probably not as much of a fan of these as you were of the original 82 cent kind.
No, the 82-cent ones looked a little better.
A little bit, just a little bit, to the tune of roughly 4x better. But yeah, apparently someone out there deciding there's still some juice to be squeezed out of that strike. So a very timely question after all, Mr. Robert L. Thanks for that question. Thanks to everybody who wrote in. And now it's time for us to keep on rolling right into our final segment. It's time for Around the Block. All right, and welcome to Around the Block. This is, of course, a portion of the program where we tell you what we're watching, what we're keeping an eye on for going into the old weekend. We highlighted at the top of the show that it kind of is the tail end of earnings season, but there still were a few names making headlines, making noise, Lulu among them. Also Sears, we didn't touch on them at the top of the show, but they've been making some noise as well. So you can't really totally write off earnings season towards the end. There still are a few names that are relevant. Lulu probably most top of mind for you guys out there who are active options traders. I know that's pretty attractive still, even though the underlying doesn't move as much as it once did for options traders out there. But aside from that, they're really that's kind of the last bits. We're kind of hitting the dregs, unless of course you count Restoration Hardware today reporting as a big mover, and Crown Crafts, of course, coming out tomorrow. So earnings kind of tailoring off here, but a few other things on the horizon. Mr. Rock Lobster, what is really top of mind for you going into the end of the week and the weekend?
As one of my clients were making fun of me, I was liking the time spreads in the SPX, and I'm looking at the 10 handle at volatility, and they're like, you're going to like it better at 9, because, I mean, at the money index volatility looks like they're just, if the grease thing doesn't move vol at this point and they sell it off, we could see lows again, like, all-time, not all-time lows, but probably still see lows for the year, and possibly see VIX press, somewhere close to below 12, which, every point in volatility on the way down now is pretty hard earned. So, but if nobody cares about whatever Greece is doing, or they think they're just going to get a deal and this is all a bunch of noise, we could see, back on the two-saw train of higher prices and lower volatility here through the summer. So I can't disagree with that if the market gets by this easily.
Yeah, every handle on the VIX south of 13, you're right, is really very, very hard fought. We're hovering, like I said, about 1285 right now in the VIX cash land, and I believe it was your counterpart, your better half over there at the pit, who was prognosticating on last week's vol views that we probably would see a little bit higher vol this week. Not to give spoilers for tomorrow's episode of Vol Views or anything, but seems like that prognostication perhaps not coming to pass. Not as much Greek fear / love out there from a vol perspective as I think a lot of people were expecting going into the end of last week. Sounds like yourself included, Mr. Rock Lobster.
Yes, I did not have the kind of the short vol positions were not short enough. They were more spreads, and they're all very disappointing in zeros. So But it's the way it goes sometimes.
Can't all be winners, sir. Something I'm sure they'll learn in your boot camp should they choose to take it. All right.
Damn Greeks are supposed to wait longer. They weren't supposed to fold so early.
Boot camp episode 1, never trust a Greek bearing gifts. Or in this case, illusory gifts, because they didn't last too long.
Gifts of elevated vol.
Yes, gifts of elevated volatility. I think they had that parked in the back of the Trojan horse there. They had all those Greek soldiers and some elevated volatility to boot. some free VIX contracts for all were lurking there in the tail.
Yes, with the slings and arrows.
Yes.
Right there.
All right, and Uncle Mike, save us from this Greek madness. What are you watching for the rest of this week into the weekend?
Well, we're 1 day away from all-time highs in the SPX. If we get a big day tomorrow, I believe we closed today at 2108. All-time high is 2134. Now, that's a little bit of an aggressive day, but we've had stranger things happen in the S&P, so just watching to see if we can make the new all-time highs again. Continuing to watch bonds as they continue to creep lower, with the exception of today, of course. So I think we're in a very interesting market in that there's nothing stopping us from going higher at this stage, with the exception of Greece and then the psychological all-time high mode. And in terms of the bonds going lower, the market's lowering it or is raising interest rates on its own. It's just basically poo-pooing what the Fed does and says, okay, we'll lower rates on our own. So I just think the relationship between long-term bonds, even short-term bonds, but primarily longer-term bonds, and the stock market itself is very, how can we put this, fascinating at this stage in the game.
Well said, sir. Fascinating it is. Unfortunately, we'll have to leave it there for all that fascination, at least until our next episode. But before we go, as always, let me check back in with each of my cohorts here on the old All-Star panel, see what they have cooking up. Mr. Rock Lobster, I kind of know which way you're heading. I'm guessing you're going to talk about some boot camps.
We are boot camping currently. Mark actually is doing tonight. I did the first 2 days. Then there's Saturday, but anybody that is interested in getting a recorded version of it and slide decks and all that, I'm sure we'd be able to work some kind of deal out with you. That is our big thing. And then obviously our next monthly webinar, we'll be coming out with that shortly. So as of right now, that's what we got going on. We also have we have our Trader Summit in Chicago in late July. So anybody that's like a Gold Course member or above that wants to come in, we set up lots of interesting people for our clients to talk to. Plus, you get to talk to Mark and I, have a couple hot dogs, go see a Cubs game, and and essentially live the Chicago lifestyle that Mark lives and breathes on a daily basis.
Live the dream, sir. Live the dream. All right, check that out, listeners. OptionPit.com to learn more. And Uncle Mike Tusaw, what's cooking in the land of the old wealth advisors?
The old wealth advisors. Well, once again, we're getting some responses from our self-directed traders. If you are looking to trade through either TD Ameritrade or Interactive Brokers, and you'd like to do it at a rate with which we get at RCM, we have over $100 million of assets under management, so we get very preferred commission rates. And so if you're looking for something along those lines, or if you'd like to get advice on the trades with which you're doing as you're doing them, feel free to give me a call. 312-212-3531, or send me an email at mtusaw@rcmfs.com.
Thank you for that, Uncle Mike Tucson. On behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course, for sending in such great questions. Keep them coming, and we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.